Hi, I'm Larry Gaines, founder of PowerCycle Trading. I've been actively trading the financial markets for over 3 decades, and I started PowerCycle Trading in order to teach and mentor traders and investors on how to trade using options for controlled risk and greater leverage. Now, I've had a number of my clients ask about short interest, so I wanted to do a short video to cover what short interest is and how it can affect the price of a stock or how it affects the market. So if you'd like to read the article, though, you could go to my website as well, powercycletrading.com, and come down and you'll see a lot of articles listed below. So if I scroll down here, you'll see this first article with the little boy in the cowboy hat is what is considered a high short interest ratio with rules of thumb. So let's cover what that is in this video. Now there are two different ways to kind of look at short interest ratio, and one is called days to cover, and then the other is the short interest as a percentage of float. So when we look here, short interest ratio as days to cover, this definition is basically as follows. If you take the number of shares on a specific stock that's shorted divided by the average daily volume, that's going to give you that ratio. Now, for example, if you had 1,000 shares of XYZ Corporation that had been sold short and the average of 100 XYZ shares are traded each day, then the days to cover or that ratio is just taking the 1,000 divided by 100 is 10. So this means that if all the shorts wanted to cover their position at the same time, it would take around 10 days to do so. So, a high days to cover means that short sellers would take a long time to unwind their positions if prices were suddenly to rise. So this can really create a big short spike in the markets or in the shares traded. Now the other one is to look at the short interest ratio as a percentage of float. So the percentage of short ratio of float is you take calculate the ratio by dividing the number of shares sold short by the total number of shares available for trading. So for example, if you had say 10,000 shares of XYZ Corporation and 200 of these shares are held by a company officer, those are considered locked in, so they can't be sold. So in this case, the public float is 9,800 shares. So that's how many shares can actually be traded. And let's then say that 100 shares are sold short. So you can calculate the short interest ratio by dividing 100 shares sold short by the 9,800 of public float that can be traded, and that gives you your short interest. And in this example, that would be a short interest ratio of 0.01 or 1%. So when you start looking at stocks that have a short interest or percentage float of 50%, this means that the short sellers would have a very difficult time covering their positions if the price was to go up. And that, again, can start what we call a short squeeze and really make it accelerate. So, whenever you see really 20%, 30%, 40%, 50%, you need to be very, very careful if you're looking to short stocks that have that kind of high percentage of short interest. So let me show you a quick and easy way to kind of figure this out. So you can use one place you can go is Yahoo Finance. So I'll show you a couple examples. So just pull up Yahoo, Yahoo, and then go to Finance right here. So Yahoo Finance, click on that, and then put in here what you want to search for. So I put in Apple. So we're going to look at comparing Apple, their short interest float, to another stock, Bed Bath & Beyond. I'll show you the major difference. So type in Apple, and so you can see Apple pulls up. And then what you want to do is you go down here to statistics, right here where I'm hovering over statistics, click on that, and then that will pull up the statistics, the kind of daily or the stock data as far as how many shares are outstanding, etc., and we can figure out the float. So here on Apple, you can see shares outstanding, 4.72 billion shares, and then the float is those that are actually able to trade are 4.46 billion. So you've got percent held by insiders, 0.08 held by institutions. So then you have short shares that are short, and you've got 96.83 million short of Apple, and that as a percentage of the float is short ratio would be 3.47%, or percentage of float of 2.05%. So this is where you can get that information. Now that's Apple. So let's take a look and show you the difference, and I'll show you Bed Bath & Beyond, which has a high short interest, and how that can affect price. So here are the statistics on Bed Bath & Beyond, so BBBY. So here you can see that the shares outstanding are 137.47 million. Float, those that are able to trade, are 128.92 million shares. So then you come down and you look at shares short, there's 46.51 million short. So that short ratio is 11.86%, whereas in the Apple example, that short ratio was only 3.47%, and then short percent of float is 38.84%, and in the Apple example, it was 2.05. So you can see the huge difference. And so when you get a lot of shorts in here and there's not enough to cover, you can get what we call a short spike or short squeeze. And that's exactly what happened to Bed Bath & Beyond in the last couple of days. So here's Bed Bath & Beyond on a daily chart, and you can see that from the low of March 25th, it spiked, huge gap up, and it made a high up here of $18. So it went from about $13.50 to $18. So that's like a 32% jump increase, and that was all set off by some news about some activists coming in wanting to change things around at Bed Bath & Beyond, and with all that percentage of short float of 38% or whatever it was that I just showed you, it really squeezed the shorts. So that's one thing to be aware of: short interest, short float, and use it to your trading advantage. So I hope you found this video helpful, and if you'd like to learn more about our services at PowerCycle Trading and how to trade options, come visit our website here at powercycletrading.com. We've got a lot of great articles, great courses, videos, a lot of videos, and also great free ebooks that you can come in. So if you come into the site here and you just get toolkit right there, you can get a lot of our free ebooks, and then you can always check out what we've got coming up as far as free webinars. So go to upcoming live events right here and click on it, see what we're going having coming up, courses, trading software, just a lot of great stuff. So hopefully you'll come visit us, and I look forward to working with you in the future.